This market has been absolutely brutal, with Bitcoin and Ethereum 50 to 60% off their all-time highs, while altcoins bleed at over 80% down. Here's 3 strategies I'm using to dollar cost average into blue chips and survive this bear market. We're going to dive into Curve Finance, which serves as the backbone for all of DeFi, talk about GMX, which is the perpetuals exchange, as well as stablecoin farming on the Near ecosystem. What's up, YouTube? Welcome back to my channel. I am Crypto with Nick. I'm a crypto investor and DeFi enthusiast, and I'm sure we're all feeling the pain of this bear market. My goal is to share some of my strategies and maybe give you some ideas on how to manage your portfolio, and I'd love to hear from you as well. Make sure to drop comments on what you're thinking about this market. Come join the Discord. It's free, but let's get into it. Let's first take a look at Bitcoin. Here we have 9 weekly red candles. You can look at the rest of this market cycle. This is the first time we've seen 9 weekly red candles in a row, really without any relief. But if we look at the 4-hour chart, we can see we've kind of been in this range the past few weeks. And if we go ahead and look at today, right, today is Memorial Day in the United States. It's a bank holiday. We blasted through this channel right to the upside. So is a local bottom in? It seems like we might be getting some kind of relief bounce. That doesn't mean we can't eventually go lower, but I think it is due time that we saw some relief. So I think that's what you're seeing here. And even though we've seen this nice relief to the upside, I'm not convinced quite yet, right? I will not be going long altcoins just yet, right? I have no desire to call the bottom. I'd much rather wait for more bullish confirmation, and then I'm happy to go long. We're going to come over here to DeFiLlama.com. This gives us a really nice overview of all the total value locked across all of DeFi. Right now, $126 billion. So what we're going to be looking at today for the first part of this strategy is actually Curve Finance. You can see Curve Finance, number 2 project across all these different ecosystems, $9.63 billion locked. If we go ahead and click on the project, we can get a little bit more information about it, such as the website, its Twitter, and even its audits, right? So if we come over here and check out it's audited by both QuantStant and Trail of Bits. Trail of Sips is known as one of the top auditors in all of the crypto space, so I feel very comfortable with this application. So if we come over here to basically the home screen of Curve Finance, what you can do at the top, there's this network section, right? And you can see, again, of all these different chains, Ethereum, Arbitron, Aurora, Avalanche, right? We're going to touch on a few of them. We're not going to go through all of them, but you can see very cross-chain oriented. Curve Finance does a really good job of providing really deep liquidity, meaning it allows you to trade large volumes with extremely low slippage. So here on the Arbitron network, if you haven't bridged to Arbitron yet, it's an Ethereum layer 2. Definitely recommend. It's been a really great experience. Obviously much cheaper than Ethereum. Transactions are about 50 cents. And if you're enjoying this video so far, please hit that like button. Consider subscribing. It would truly mean the world to me. It definitely helps with the YouTube algorithm, but let's get back into it. So what we're going to focus on here is the Try Crypto pool. And if you look at this Try Crypto pool, right, $38 million, I believe it's the second largest pool on this entire platform. It looks like the number 1 pool is the 2 pool, which is 2 stablecoins. And it's made up of 33% stablecoins, in this case USDT. That stablecoins sometimes vary depending on which chain you're on, but on Arbitron it is USDT, 33% Bitcoin, and 33% ETH. And by doing so, you're going to receive 1.17 APR on the coins that are in the pool, right? So you're going to get more stables, Bitcoin, ETH. And additionally, it's been incentivized with Curve tokens, so you're going to get another 8% of Curve rewards. And I think one of the questions here is, if you want to invest $1,000, right, why waste going through Curve and dealing with this platform? Why not just buy $300 of each coin and call it a day? One of the biggest benefits, of course, is by investing in this pool is you're going to get 9% APR, right? If you're not bullish to Curve token, no problem. Just go ahead and sell off the Curve tokens, right? Reinvest into this pool and you'll own more stablecoins, Bitcoin, and ETH. The other part of this is how a liquidity pool functions. See, when you enter in a liquidity pool, it has to always maintain a balance between the coins in that pool. Traditionally, you see 2 coins, right? So it maintains a 50-50 pair. In this case, we actually have 3 coins. And the way that Curve works in AMMs, which are automatic market makers, in order to maintain that balance, as Bitcoin and ETH appreciate, they'll actually sell off and buy more stablecoins, so you can kind of think of it as de-staying out of a position. On the other hand, if Bitcoin and ETH continue to fall, it will do things like sell the stablecoins to buy more Bitcoin and ETH. And that's because in a liquidity pool, you will always own the most of the underperforming asset. So in the best case scenario, if the market just trades sideways, you're still going to earn that 9% on all of your crypto, which means regardless if things are go up and down, you're still making a return. Now, if you've been bearish like I've been over the past few weeks, I'm using this to slowly essentially sell off stablecoins, kind of like a bot, and it's going to buy me more Bitcoin and ETH. And when I'm ready, and I think there's been more of a bullish confirmation, that's actually when I would pull money out of this pool and then go ahead and make different bets. So the biggest question I have is, how do I get started with using Curve application? Because let's be honest, this thing looks like it's out of Windows 95, right? I thought this was the scammiest thing in crypto. I couldn't believe that this at one point was the #1 project. Now it's at #2. But let's dive into it. So if you come to the Try Crypto pool, the first thing it's going to do is kind of take you to this buy sell screen. It assumes you want to make a trade. But instead what we're going to do is come over here to the deposit screen. On the deposit screen, right, the big question is, it's like, well, do I need to own these 3 tokens to deposit them? Not necessarily. What you can do is you can actually deposit any of these coins and it will balance it for you and split it among those assets. You can see if I go ahead and try to put $100 in here, what you'll see is you'll be exposed to these 3 assets and their individual price variation, right? It's just warning you to make sure users know. And in return, of course, you get LP tokens. What you're going to want to do and make sure you deposit and stake engage. It's multiple Curve transactions. If you just deposit and don't stake engage, you actually don't earn those additional rewards. And of course, if you want to withdraw, all you have to do is come over here to the withdrawal section. Here you're given a chance if you want to withdraw in a single currency or you want to withdraw in the 3 currencies equal part. A lot of times you get a slightly better rate if you choose the 3 currencies. So just something to play around with, right? Make sure you're getting what you want. Doesn't do you any good if all of a sudden you're going to go to a different decentralized exchange, right, and make a swap anyways. Of course, if you're not bullish on the Curve token like I am and you don't want to compound it manually, come over here, Beefy Finance, #1 blue chip of auto compounder, $500 million locked. Remember, this is additional smart contract risk, but you can find these pool, deposit your LP tokens. It'll take care of all the compounding for you. Anytime I recommend a pool like this, I always get the comment, well, what about impermanent loss? Because people, I think, overblow impermanent loss or really don't understand impermanent loss and think it's much more detrimental to their gains than it really is. Impermanent loss is this concept where instead of providing liquidity to something like Curve or decentralized exchange, if you just instead chose to held stablecoins, Bitcoin and ETH in your wallet, and then Bitcoin and ETH appreciate in price, you'd be better off. But if we look at something like this calculator, we can see, let's pretend this is stablecoins, right? It's making up, let's just pretend 34% of the pool to get 100, right? Bitcoin, we have 33%, and then Ethereum, of course, 33%. This is going to represent the Try Crypto pool. So now let's say Bitcoin goes up something like 50%, right? It just has a mega month, goes up 50%, amazing. Ethereum, let's say Ethereum goes up something like 75%. You're going to see Bitcoin go up 50%, Ethereum go up 75%, and really the impermanent loss here is only 2.6%, meaning you're losing out on 2.6% of gains, but that's really okay because Curve is actually even paying you 9%. Technically, impermanent loss can happen in a single day, and those APRs do take an entire year to realize, but I think we can all agree Bitcoin and ETH are not going to go up 50, 75% in a day, and you'll always have the chance, of course, to rebalance your portfolio if you do turn that bullish. Next up is GMX, one of my favorite projects. It's a decentralized perpetual exchange where people can take up to 30x leverage. Don't worry, we're not here to do 30x leverage. We're going to leave that for the degens. Instead, I'm going to show you something really cool about this platform because in this platform, you are the house, you are the casino for those traders. So what do I mean by you're the house or you're the casino for those traders? Well, the GMX platform has 2 different tokens. It has the GMX token, which is the governance token of the platform, and it has the GLP token. This is the GMX liquidity provider token. And as traders go long, short, or they make swaps on this platform, GMX actually captures 30% of all platform fees, while GLP actually captures 70% of all those fees. So when you decide to buy GLP and be a liquidity provider for the house, what happens is that you're actually buying a basket of these assets that people, again, use to long, short, or swap. And so when you look at this basket, what you see here is it's 57% stablecoins, and that's split between things like USDC, Tether, DAI. It's 27% Ethereum, and then 11.7% Bitcoin. You do have a few percentage here for things like Chainlink and Uniswap, but it's such a small percent. And so you're starting to see this looks a lot like Try Crypto, right? Bitcoin, ETH, and Ethereum. The current weight right now is a little heavier ETH than the target, right? The current weight's 27, the target is 25. Bitcoin is a little underweight at around 11. They want to get it to 20. The platform has ways to incentivize people, but you can see here how it basically looks like another Try Crypto pool. So if we come over here to the earn type and we actually scroll down, we can see here the GLP section. So the very cool thing about GLP is it actually pays an APR. 13 or 14% of that is paid in ETH. And then another 13% of that is paid in the platform known as Escrow GMX. Escrow GMX just means that when you get paid out in this token, you do have to stake it for a year, but I am bullish on the tokenomics of this platform, so I'm happy to accumulate GMX and stake it. If you want to purchase GLP, of course, you can come over here, buy GLP. Let's say we want to buy 1 ETH, right? What you'll see is these different fees of this platform. You'll notice that Bitcoin has a 0% fee, right? That's, of course, how it incentivizes traders to buy into GLP using Bitcoin, right? We saw that Ethereum was a bit overweight. That's why you see it as a 0.2 compared to some of these others. And again, when you want to sell GLP, you can come over here, you can sell, you can go ahead and pick any asset that you want to exit. So if you just want to exit with ETH or Bitcoin or stablecoins, right, you have that option. Same as when we talked about Curve and Try Crypto and when you withdraw from that pool. So of course, one of the reasons why I'm bullish on GMX and GLP is if we look at the stats, right, you can see that the platform fees are just up and to this right? This platform continues to make money, right? 70% of those fees are going to GLP holders, right? So the more people that come and use this platform, the more money everyone will make. But we should talk about a very important aspect about being the house or being a casino. Because if you take the analogy where, let's say, somebody comes in to play blackjack and they take the casino on the run and they win a significant amount of money, right? The casino has to pay out. That's the same thing with GLP. When traders win, GLP loses. And when traders lose, GLP wins. But as they always say, right, the house always wins. So let's check out some of this data. We can see here there's plenty of times where traders have done a really good job and all that gets paid out of GLP, right? So you would lose value that way. But overall, long enough time horizon, traders have continuously lost money. And you can see here, they're down about negative $20 million over this time period. And it's the human nature to be optimistic and want to go long, right? So you can see historically, traders are often long, much fewer traders short. So these last 8, 9, 10 weeks have been an absolute bloodbath for traders, right? They've been getting wrecked, which means all those profits flow into GLP as well as those APRs for all those platform fees that it's generating. So just something to keep in mind when you compare something like Try Crypto of Curves and GLP, right? Even though GLP does pay a higher APR, I'm diversifying between the platforms because, of course, there are some additional risks that come with something like the GMX platform. Finally, the last part of my bear market strategy is going to be stablecoin farming on Rev Finance. Rev Finance is on the Near ecosystem. And that's because Rev Finance is receiving 500,000 in USN rewards every month from the Near Foundation. USN is an over-collateralized stablecoin coming out of the Near ecosystem, a completely different model to UST and Luna. I see some people comparing it to that. It's nothing the same, right? It is an over-collateralized stablecoin, much of something like DAI. If you want to learn how USN keeps its peg, one of the methods is through on-trade arbitrage, which you can read about here. The other method is its reserve fund. You can see here that initially USN is double collateralized by both Near and USDT. Is my understanding this is for the first 1 billion tokens, it will even be double collateralized. I definitely encourage to come read these articles by the decentral bank, but you can see here that the stability design of USN means that in the worst case scenario, that the decentral bank could buy back the entire amount of UST ever issued. If we come over here to USN, back to the platform, there's two pools I'm particularly interested in. One's USN and USDT, as well as USN and CUSD. You can see that these rates are pretty good. 13% here, 17% here, right? This is going to be paid. A lot of it's going to be in the Near token and the Ref tokens. Two tokens I'm bullish on, so really interested in stablecoin farming on this platform. If you do want to get involved with Rev Finance in the Near ecosystem, you do need to have a new wallet. It is a Near wallet. I definitely recommend when you set it up, make sure you use a Ledger or a hardware wallet, but you will not be able to use MetaMask, unfortunately. If you're looking to move funds from the Ethereum mainnet to Near, come check out the Rainbow Bridge. In my opinion, one of the best bridges out there. You can go ahead and try it out. You can move funds from Ethereum to the Near mainnet, right? You can move a few different types of stablecoins, but the Rainbow Bridge is how you can do it. We talked about so many different things. We talked about Curve Finance and the benefits of Try Crypto Pool, right? Using something like Try Crypto to DCA into blue chips. We talked about GMX and how to be the casino and the house for those degen traders. We also talked about why I'm bullish on Near still in the USN stablecoin. But anyways, if you have any question on getting started or navigating your way through these platforms, right, make sure to drop a follow on Twitter, send me a DM, come join the Discord. Don't worry, it is free. All the links will be in the description. But anyways, see you in the next one. Cheers and happy farming.